I'm Charlotte McLeod with investingnews.com, and here today with me is Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com. Thank you so much for joining me. Great to have you on.
Yeah, good to be back, Charlotte. Thanks for having me.
Really good to be talking to you. I think it's a great day to be catching up with you, given everything that's going on in gold. And when I was getting ready for this, I looked back to the last time we talked, which was all the way back in May. At that time, I believe we had gold at or around the 2000 level, and people were getting pretty excited. And one thing you told us was that for you, it was the 2089 level that was the breakout zone. So now that we're kind of up around that level, we've seen a lot of interesting price activity the last few days. I'm wondering what your take on gold is and if it has checked all the boxes to finally break out.
Right. Yeah. Good question. Well, there's a lot to touch on. Let me share my screen here and give you a kind of a visual of how I see things unfolding here, which if we just take a quick look at the daily chart, we can see there has been a huge run up in overnight trading, way up. It ran up to $2,152 and it has now sold back down and is down around the 2045 mark, which is a pretty wild level. It's good to kind of peel back the markets from a technical level standpoint and look at it from different point of views, different time frames. And the monthly chart is a really good high-level view of kind of where the market is when it comes to gold price. If we go way back here and zoom out, we can see the last major super cycle to the upside. And then we've gone this multi-year consolidation. And now we started a new super cycle in 2019. And we're in this big consolidation still. But really, we're right at this threshold, this breakout level, which I talked about, you and I talked about it back in May, this 2089 level. And every time we've seen gold get up to these levels, we've seen a very big pullback. The average over the last three pullbacks has been about 17%. And November was a really strong close. It closed at a nice high level. Sorry, let me just go to the monthly chart. That was the weekly. Sorry about that. This gives us a really good view of where we are in the grand scheme of things. November was a nice, strong close, and this month for December is one of these long wicks that has poked into new all-time highs for gold, but it has been met with a lot of resistance, a lot of selling pressure driving it back down. Now, if this monthly bar for December was to stay like this, it actually points to many months of lower prices for gold. And so we need to see how this month is going to hold out. I mean, we're only a couple trading days into December, so this is a very young move in terms of what it's doing. But when we take a look at it from a granular level, we look at the 10-minute chart. So this is over the last 1, 2, 3, 4, 4.5 trading days. We saw gold run up in overnight trading. And right up here is where the breakout zone took place. And of course, anyone who is betting against gold, meaning they're short gold, they're trying to profit from falling pricing, when gold hits new all-time highs, they're going to have to get out of those short positions because they're wrong in terms of the direction. And so we saw a huge short covering squeeze, I think, in overnight trading. And this drives the price up because investors who are short, meaning they have to buy back the shares that they sold to try to profit from falling pricing. So this caused a huge feeding frenzy. And on top of that, there's other traders and investors who say, if it hits new all-time highs, I'm going to buy a bunch of gold. And so that's what created this technical move where literally as soon as we broke it, it was this massive explosion of buying. And of course, when a trade is crowded, meaning everyone is buying it or everyone is selling it, everybody's doing the same thing, it's typically an emotional turning point in the market. And of course, we have seen since then, gold has been selling off and the volume keeps getting higher and higher in terms of the selling pressure. So it is not a very bullish sign from a short-term standpoint for gold, what's been going on. So this really shows how a technical level, when broken, triggers all kinds of orders and emotions for people to pile in and have to do something, and how the market has a way of kind of negating that move. So this is what we're dealing with today, is this huge move. It was about a 5% rally. It's down about 5% from the highs this morning, which for gold is pretty insane. A big day for gold is typically about a 1.5%. So something where it rallies 5% and sells off 5% is pretty intense for that whole commodity space for gold. So it's going to be a very interesting month where the gold chart closes out, because it's at this point, it's a very bearish looking chart at this point.
Okay, really interesting to have you go through the charts like that and take a look at what could be coming for gold. So it sounds like we really need to get through December, which is interesting because we're still just at the beginning of December. So get through the month, see what happens. Is there anything you can say about what may happen in 2024? Maybe there are a couple of scenarios then that we could lay out and to see what could be coming next year.
Yeah, so there's a lot of things coming together. More or less, gold broke into a super cycle back here in 2019. The last time we saw something like that was back over here in around 2021, where gold started this huge super cycle to the upside. And so I believe we're in this big super cycle still, but these super cycles last a very long time, and there can be big pauses and pullbacks. For example, we saw a multi kind of year pause in gold here, just as the stock market was topping out in 2007. And just as the stock market was topping out and rolling over, gold had a really strong push up as a defensive play. And I feel as though we're actually in a very similar scenario to that right now, where gold's starting to come back to life, other than just this one day kind of blip on the chart, which is very technical. So we don't know if this is actually a bearish candle yet. We could be starting to see the same thing. We could see gold actually push and muscle its way higher for a couple of months as the stock market potentially kind of gets closer to a major top and starts to roll over. In 2024, I do think we're going to see the economy roll over. We're going to probably see a big correction in the stock market. It's going to create massive selling across most asset classes. And as the stock market sells off, it'll probably pull gold back down, just like we saw in the 2008 bear market. Gold pulled down about 34%. And so if you notice, this pullback that we had in 2008 is really just the halfway point. And then gold continued to take off after that. So I feel as though this is going to be something very similar. Gold might end up muscling its way up, moving higher for a few months, but I do think it will be under pressure in due time, just because of the way the economy and the stock market, there'll be a financial reset. But when we look at it from a big standpoint picture, we can look at using Fibonacci extension, we can look at the upside targets. Eventually, I think we're going to see gold reach about $2,500, $2,600, $2,700 to the upside based on just this recent rally, this consolidation, and then eventually I think it's going to head higher. So the long-term picture is really bullish for gold. And really, we're just starting. To me, we're in the infancy stage of another super cycle to the upside. And what I think is going to actually help fuel this is, let's take a quick look over at the dollar. If we take a look at the dollar index, this is the monthly chart. Well, we had the dollar rally up during the 2000 kind of tech bubble crisis. When there's a major stock market kind of crash, we see the dollar push higher. It was the same in 2008. We saw a huge rally in the dollar. And where we are right now, I think we're going to see the stock market eventually correct in 2024. Money's going to flow back into the dollar. It's going to get back up to these highs or the highs that we saw back in the tech bubble. And that is going to put downward pressure on gold. That'll be that little pause, that pullback for gold that might last 3, 6, 8 months or so. And then I think the dollar is going to top and it's going to head down, as you can see here, for a very long time. That's going to be a huge, I think, kind of tailwind for gold, silver, miners. I think that's when they start their next really, really big rally. You and I have talked about this many times. These are multi-year patterns. It takes forever for these charts to unfold because each bar is a month. But I think 2024, maybe the second half of 2024 could be the year where finally, as a precious metals trader and investor, we're finally going to get one of those big moves that can last many years. And we see gold miners rally hundreds, thousands of %. But we're not there yet. I think it's still going to be a difficult time because I think we're going to see natural selling pressure, which will pull gold down. The strong dollar is going to put some downward pressure on gold. And when we go back to gold and just look at how I think that will unfold, again, that will be more or less gold might rally up, but then when the dollar starts to rally and the stock market corrects, it's going to pull gold down a bit with it. But then eventually it's going to gain traction and take off. So that's kind of like the view. Right now, I'm still very neutral on gold. We're not seeing silver participate. We're not seeing gold miners participate. Really, gold is that global defensive kind of safe haven play that if you were to ask any, random investor who's not heavy into the markets, they're not a technical trader or anything, they'd probably say, oh, maybe I'll buy some gold. It's just what comes to mind. And gold is typically very slow moving, which means you can put large amounts of money to it and not stress about it, because typically it only moves a fraction of a percent a day and it holds its value. People buy gold, they accumulate it, they don't actively trade it. So it's constantly has kind of an upward bias to it over the long run.
Okay, I do think it's always worth pointing out that things happen slowly. It's not always as quickly as people might want to see them. So, really good to go into that. I was hoping we could talk a little bit more about what you mean when you talk about a stock market correction. So, I think that during that last conversation we had, we talked about the risk of a recession in the US. And you mentioned, I believe the last time we had that back in 2008, stocks went into a stage 4 decline. So, interested to hear more about that, especially because in the mainstream, we keep hearing more about how we might actually have a soft landing. So, interested to hear how all of that fits together for you.
Yeah. So if we go back to this infographic that I like to show, it really breaks the markets down. There's four stages that the markets go through, and the phases that we can make a lot of money as an active investor or trader is a stage 2 advancing stage. This is known as a bull market phase. It's what everybody wants all the time. And then we also make a lot of money in a stage 4 because it is a strong trend. We don't care if it's trending up or down. We can make a lot of money either way. What we don't like are these stage 3 topping phases, which are choppy. Stock market has been in this for like 2 years now. Same with the stage 1. It's usually a bottom stage. Gold miners have been stuck in this kind of stage 1 basing for a long time, many years. And it's kind of dead money until, whatever you're following, you need it to be in a stage 2 or stage 4 to make a lot of money. So right now, the stock market to me is in this stage 3. We're in this complacency move, which if we go down to the emotions of the market participants, we're kind of in this kind of rally back up to these highs that we saw back earlier this year. And people are thinking we're going to go for this soft landing. They think, the new bull market is going to start. The reality is, I think things are actually going the opposite direction. And eventually where the markets are going to break down, people are going to get anxiety and we're going to go into that stage 4 decline. But this is the overall cycle how a market works. We have a blow off phase and then it consolidates. People have false hope, believing we're going to start another bull market, but it goes the opposite direction and catches a lot of people off guard. So when we look at the markets here, we saw the tech bubble over here. Eventually, it went into a multi-year stage 4 decline. We also had a breakdown and a consolidation through here in 2008. It went into a stage 4 decline. And now I believe we're coming up for what could be a pretty major double top. And this is kind of like a complacency move. And I think eventually we're going to see this roll over. And there's a lot of downside potential to this market. And this whole complacency phase is very dangerous, especially if we look at the NASDAQ. The NASDAQ really shows more so the emotional phase. If we actually zoom back to how the 2000 tech bubble unfolded, we saw more or less a 40% pullback. And then we saw a complacency move for about a 44% rally. And then the markets, they ended up falling about 80 plus percent. It took 15, 16 years for the NASDAQ to come back. In 2008, we had the break to the downside. We had a complacency move, and then it went into a stage 4 decline, corrected over 50%. And I believe now we've come down and now we're going back up in this complacency move. I think we might put in more so of a double top, maybe even pierce to a nominal new all-time high. And we need to see how the market reacts. If people pile in and create another technical short squeeze and people get in because they hear on the news, it's a new bull market, we're hitting new all-time highs. But if huge sellers step in and crush the price, which is what we've seen many times before, this could come right back down and break down into a very big way. And so this could be one massive double top in the tech space specifically too. It's even more pronounced, but we're looking at potentially multi-years to recover once this market rolls over. And this could take many, many years of sideways or big volatility. And that's the last thing people want to do is watch their investment capital, just like after the last major bubble, take 15 years to start making money again and lose almost 85% of your capital. So there's a huge potential scenario unfolding. And it's not about if it's going to happen or not. To me, it's about making sure your capital's protected. So if this does happen, you don't lose your money. In fact, you can actually benefit from falling pricing. And if the markets keep going higher, that's the nice thing about being a technical trader. We're long the markets. We're riding things up right now. Uranium stocks, the indexes. And if they keep going up, well, we're long. That's the great thing about being a technical trader. You throw all the fundamentals, all the Fed, all people's opinions out the window, and you just follow price. We don't need to pick a top or bottom. We just needed to identify a trend and then get on board with those. So once you become a technical trader, this is one thing a lot of people always say. They're like, oh my gosh, once you weed out all the news and just follow price and you have a game plan for both sides, no matter what it does, and you follow the trend, it doesn't really matter what the markets do. Obviously, we'd like them to always just keep going up, but that's not the case. And we can make a lot more money actually in falling markets because they fall about 7 times faster than they rise. So there's huge opportunity around the corner if this market goes into a nosedive. And I also think it'll turn into one huge opportunity for the precious metals space, because I think it's going to kick into the next real major bull market for gold miners that literally we've kind of been waiting for since like 2009 or 2001, 2002. Where things are rocketing hundreds or thousands of percent. So all these things are coming, and all these markets in different asset classes are all linked in a different way. And they're all going to be, providing different opportunities. The key is finding ones that are at a stage 2 or a stage 4 where there's really strong trends and then playing those trends.
Yeah, I think you always do a good job of reminding us that there are opportunities out there, probably no matter what's going on in the markets. So you mentioned a couple of places where you're seeing opportunity, precious metals, uranium. I wonder if we can go a little bit deeper into areas where people might find opportunities in 2024, or areas where they just might find protection if that's what they're looking for.
Yeah, I mean, I think a place of protection, when things get really wild, I like to step away from volatility. I like to move to slower moving things. I think, let me just go back to the daily chart here. I love the US dollar index. It's a nice trending. Currencies trend very nicely, I find, in most cases. The dollar moves very slow, very rarely does it move over 1%. It's kind of like gold. And I do think there's going to be some good, like in 2022, the stock market, the average portfolio was down about 25%. Well, you could move into the US dollar, which the dollar it had a massive rally. And while it looks really massive, I mean, it's a 20% rally, but it's a fairly slow, conservative moving market. And I think the UUP, which is the dollar index, if the stock market goes to sell off next year and starts to roll over, instead of trying to get fancy, if you're not a technical trader, you don't have strategies in place, you don't know how to manage money, sometimes moving to cash is one of the best opportunities or one of the best positions to protect your capital. You could move to literally cash to the US dollar index. And as the world falls apart and the dollar takes off, you're actually growing your account in something that's very slow and conservative and you're probably comfortable with. Most people are pretty comfortable holding US dollars. And this becomes it's the reserve currency. So it naturally wants to go up during chaos. So this is the most conservative way to take advantage, I think, of chaos next year, to kind of sidestep and have low volatility. In terms of potentially looking at the miners, if we take a look at the gold miners and zoom way out here, we can see they've been forming the stage 1 basing for a long time. They showed some earlier life back in 2020. And they're still kind of in this basing phase, but there's going to be a time where they take off. And there's going to be a huge opportunity there. So it's just a matter of letting this stage 1 work itself out, waiting for the right market environment. A lot of people think they always need to own positions. They have to have multiple stocks. But the reality is the stock market, if you look at it like the ocean, the tide's either going up, which lifts all boats, or it's going down and takes all boats down with it. Stock market is the same. If we're in a bullish phase, you naturally want to own stocks. If we're in a bearish phase, you don't. And right now, the precious metal space, when it comes to the miners, they're still struggling and they're not really in a full on bull market phase. So we don't want to hold assets quite like those just yet. Got to wait for the technicals, the long term and the short term trends to fall in line, and then ride those trends higher.
Okay, yeah, good to take a look at the miners. I know we have a lot of people who are curious about what's going on there, when they may break out. It sounds like it's not going to be quite yet. If we look over to silver, I think you started to mention silver earlier on. It would be great to take a closer look at what's going on there. Silver, I believe this year has kind of topped out at that $26 level. So curious to know about what you see coming in 2024, especially in relation to what's going on with gold.
Yeah. So when we take a look at silver, as we can see, silver's had these massive blow off spikes in the past. I think silver is very similar to gold miners. It's had this correction. It's put in a base. It's still building out this launch pad for it to take off and rocket higher. I think that hopefully is going to happen in 2024. But silver is definitely struggling. Silver is more of a speculative play, in my opinion. Gold is equivalent to trading up here. Silver's down, 50% from the highs. Miners are down about 50% from the highs. These things should be moving up with gold if it was a broad precious metals rally. And we're not seeing that, unfortunately. So I think there's going to be more time where we see gold, silver miners kind of flounder in a sideways range. Could still be a pretty big range until we get that perfect scenario. So just like if the tide is going up or down and the stock market is bullish or bearish, we're not in a bullish phase yet for precious metal miners. Once we kick into that bullish phase, then that's when we start to really see things take off. So it's a matter of just letting time work itself through the precious metal space, silver and miners more so. And eventually we'll start seeing them come to life. But right now they're really just struggling. They're still trading sideways and the money isn't quite flowing there. But when they do spark, they dramatically outperform gold. No, they will play catch up and then surpass gold. So that's what, the big lure for them is as we can see these charts, these are absolutely phenomenal opportunities. The thing is they're short-lived. For example, 1, 2, 3, you got like 4 months, 5 months to try and catch a move that, each time, or maybe a little bit longer. But we're talking over, 10, 20, 30, once every 30 years, this is kind of happening to try to nail 3 or 5 months. So that's what a lot of people, they get sucked into trying to catch these, because if you catch one of these moves, you feel like $1 million and it's the sector you fall in love with, but they're very rare and people will hold on to their positions for a long time. And that money just kind of sits there when it could be in other assets. But once this sector comes into life, this is when we want to get ready to get into. Then we catch one of these moves, but then it'll be over quicker. People wait 10, 15 years for it, and then it's over potentially in less than a year. And people think that was too quick and they hold on to it and they repeat the whole cycle. So it comes down to managing positions. We're in here to make money. We're not in here to like ride something because we love it and it's exciting. We're here to catch a spike, watch it start to, reverse and get out and then go find the next asset. I think uranium stocks are going to be one of those as well. They're actually really coming to life for huge potential, I think, in 2024.
Yeah, we should go into uranium a little bit more deeply if you don't mind, because our audience has a really strong interest in what's happening over there. And one of the questions that I've been asking a lot of people is what happens with the price of uranium? Because we have seen those big price spikes in the past. People feel excited about that. They wonder if it's going to happen this time. We've seen it so far move up pretty slow and steady. So what do you see coming there? And also, if we could relate it back to the stocks, of course.
Yeah, so uranium has been out of favor for quite a long time. It actually topped out the same time that precious metals did back in 2011. They have been out of favor. Nobody's wanted anything to do with them. But finally, when we start to zoom in, we can see that they're actually really, really coming back to life. We've had a very strong rally. It's been consolidating. It's now starting to rally and break to some new highs. So there's a lot of upside potential here in the uranium space. And there's a big movement towards going, net zero carbon for the planet, all these things. I was speaking to somebody this summer who knows quite a bit about uranium, and they were saying that the new uranium facilities, these small things that are literally the size of like just a large house, have enough, they're set up that they can like power an entire state, and how safe they are and all that stuff. So for all we know, uranium might come full circle. Everybody goes from hating it to thinking it's the most dangerous thing to it might actually be what could really bring energy everywhere and in a much more green way. And maybe that's why we're seeing this whole space start to come to life. There is not a whole lot of uranium out there. It's going up in value, and this might come out of the blue for a lot of people as some type of like green tech. Although they do glow green on The Simpsons, if you remember that show. But it'll be interesting to see where uranium space goes. Like, I think there's potential for it to rally substantially, just like the precious metal miners, where these little companies, most of them are very small, could rally hundreds, thousands of percent once we kick into high gear. Now, it is in rally mode right now. It is bullish. We're actually long this ETF, but I do think eventually we're going to have a market correction, a stage 4 decline, and it will pull these back down for one, I think, final pullback before I think the stock market and these leading kind of commodity type plays actually dominate and become the hottest things. So bullish right now. I do think there'll be a weakness early in 2024. But then after that, uranium and precious metal space, I think, is going to be talked about for a long time after that next rally.
Okay. And, you mentioned kind of commodities as a whole. So we've been talking about precious metals. We've been talking a little bit about uranium and energy. Are you looking for kind of that build up for all the commodities after we go through that last pullback and then start moving?
I don't think so. I mean, I think it's going to be more so these kind of unique select commodities like gold, silver, uranium style. I don't think we're going to see like lumber and all those things really take off. In fact, I think we're going to see them flounder. Last time we saw this, we saw building supplies. The price of the commodities just kept going down and down, and for concrete and all those things. So because we're in a recession, things wind down, everything comes to a grinding halt, and most commodities, there's less demand. So it takes a long time for that to change corners, to turn back into a bullish phase. So I think it actually takes a couple of years for the general commodity basket to actually put in a bottom and start to rally, versus I think the precious metal space actually bottoms typically before the stock market does and starts to rally. So it's more of a leading indicator once we get into there. If precious metals really start to take off, yet the stock market keeps going down, the news is bleak, that'll be probably the sign that that's the beginning of the gold rally, and it's probably only a few months away from the stock market putting in a bottom as well.
Right. So you still have to be selective. You still have to be careful with what you're picking, because we can't forget about the overall scenario that we're heading into there. So I have hopefully kind of a fun question, which is looking forward to 2024. Do you have any thoughts on what the best performing asset of the year might be?
Ooh, 2024. I do think it's going to be like, if it unfolds like I think it will be, I do think the dollar is going to scream higher. I think the stock market is going to crash. The best commodity or the best play, believe it or not, maybe bonds could come back from the dead. They're down like over 40%. And I remember not that long ago, the Fed had like no interest rates to cut. He had no bullets in his gun. And now the Fed has got 1 billion quarter basis points to start shaving off and firing off to try and save the day when the stock market's collapsing and we go into another financial crisis. So I think they're talking about keeping the rates up for a long time. I mean, you can't ever listen to the news to what they're saying. So you never know. We could see bonds come back for a vengeance. I do think precious metals will do very well, but I think it's going to be a pivotal year. We're going to big sell-off in the stock market, big rally in the dollar, but then they could reverse very quickly. A lot of bear markets or the initial drops can happen very quickly, and then they take a long time to claw their way back. So Yeah, I'd probably say the dollar is the most conservative play. I like gold as well. They're both a conservative play, but they're both going to move at different times. The dollar goes up first, and then gold will follow as the dollar tops. Gold will start to rally. So I think it's kind of a two play type of year. You play the fear with the rising dollar, and then once the fear's dissipated, you go into gold to catch it as the physical safe haven asset of choice. Is kind of what I'm thinking.
Yes, yes. My apologies. I know that's a tricky question, especially looking at such a long time period, but I always find it's really interesting to hear what people say. And I think what you said is important because people want to hear one prediction and that's it for the year. That's where we're going. But I think you do a good job of showing us, okay, things can change and we have to reevaluate as we go to figure out what's actually going to happen. So yeah, so that's everything I have for you today. But before I let you go, any final thoughts that you would leave investors with heading into the end of the year and of course into the new year?
Sure. I think it's possible. We're in a holiday rally mode. In fact, if we were to look at the SP 500 real quick here, like the SPY ETF, I just want to quickly just show seasonality wise. If I show this year's price action, we kind of rallied up. We topped out in July. We went down to the lows at the end of October, and now we're into this kind of holiday rally. If we take a look at seasonality wise of the SP 500, this year has been moving very much so like it typically does. We see rally up, it tops out June, July, kind of August timeframe, sells off to the end of October, and then we go in this great big rally. So this whole year has definitely moved like it has over the past 30 years. We are in December. The SP 500 has just hit resistance from the July highs, and typically we see the market pull back for a week and a half or so in mid-December, and then we go into the holiday final push into the end of the year. So I would expect a little bit of weakness in the stock market right now. And then I think we're going to see another wave of buying to the upside. When we take a look at gold from a seasonality standpoint, gold typically pulls back the last week of November to the first week of December. So we're right in this phase. Gold not only kind of hit resistance, poked to nominal new highs, it's getting sold into, but this is also a time where sellers step in. So gold's at resistance, it's getting sold off, it's moving down, but we're going to have to see how the end of December closes. As you can see, it shows December is typically a fairly strong month for gold. So by the end of this month, that monthly bar we looked at, which looks really bearish, could actually be really bullish. And as you said, we have to not just pick a prediction, pick something we want and stick with it. We have to constantly be changing we have to change with the markets. The market isn't going to do what we want. We just have to always evolve and adjust our positions and our outlooks and expectations as the markets unfold. So that's kind of the holiday bulge and pullback if you look at it from seasonality wise. And the markets have been doing exactly what they have been doing over the past 30 years. So this year is, kind of a typical standard year. Even though most people think it's been a roller coaster ride, it's actually been a very comfortable, steady year for an investor who knows how the markets move and what to expect.
Okay, I think that's a nice place to wrap it up. We'll definitely be watching to see how December plays out for gold. Hope to have you back soon to look again at what's coming in 2024.
Great. Well, thanks for having me. Always a pleasure, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is Chris Vermeulen of thetechnicaltraders.com. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.